All right, guys, good afternoon. Good afternoon. Welcome to our aftermarket recap. It is 5 p.m. Eastern Standard Time here on a Friday, January 7th, 2022. It's going to take me a while to start getting the 2022 number. I'll be stuck on 2021 for like a couple months in my head. Let's talk about the market today. Dow fell 4 points, down 0.01%. The Nasdaq fell nearly 1%, but held on to some key levels. We'll take a look at that here in a second. The S&P 500 lost 0.41%, 4677. The VIX actually fell 4.33% at 1876. Interesting enough. Equal weight of the S&P down 0.16%. Small caps lost 1.16% today. 216.07 for IWM. And the dollar fell 0.60%, 95.73. Yields jumped 2% at 1.771. Let's take a look at credit markets. Took a hit today. 85.87 on the high yield credit markets, and LQD being investment grade bonds down 0.43%. In today's session, crude oil fell 0.65%, 78.94 to close the week. And then we had gold up today 0.41%, 17.96 an ounce, 22.38 an ounce for silver, up 0.88%. And Ethereum futures closed below 4,000. Below 3,200, 3,198, 41,775 for Bitcoin futures, still holding on to that key 40,000 level. So that's where we are today. We'll take a look at the groups, what worked today, what didn't. Energy, the big winner today, up 1.49%. Materials up about 1%. Financials 0.8%. Sound familiar? Utilities up 0.55%. Consumer defensives up 0.14%. Technology, cyclicals, healthcare, all the laggards today. In the 1 week relative performance, basically the same thing as the year to date. Energy, the big winner so far, up 8% this week. Financials up 4% this week. Materials slightly green with consumer defensives. Industrials were down 0.5%. Technology, the biggest loser, down 5.67%. Healthcare down 5.24%. Communication services down about 4%, with real estate down another 4% as yields rose. That would hurt mortgage applications, obviously, or refinances, for example. Okay, so that's where we are in terms of the groups. I think I forgot the heat map. And the reason I'm kind of moving it forward, because I had a really good question that I got on Instagram today, and I'm going to go ahead and read it and answer it. So what I'm trying to do is kind of, switch it up a little bit. Sometimes you guys send questions. Again, anything you're interested in, want to talk about, feel free to type it in the comments or send us a DM on Instagram, and I'll talk about it on an aftermarket recap video or something like that. It's probably the best time to do it. You can see here on the groups, Microsoft eked out a gain, Apple eked out a gain, Amazon down 4.43%, Tesla down 3.5%, Google down 0.5%. You can see semiconductors with a big red, cyclicals being Tesla the biggest down. Home Depot, Lowe's were down. Consumer defensive, Costco was down. I'll be buying Costco finally next week. Netflix down about 2%. Berkshire Hathaway up 2%. Word is that they're the next stock that's going to be touching that $1 trillion valuation. So keep that in mind. PayPal down 2.43%. But there was an announcement today, right after the bell. Reportedly, PayPal is considering the launch of its own stablecoin as part of a move into crypto. I like that PayPal is still sticking with that crypto. Again, that's a really good sign. They popped up about $2 after hours on PayPal. So with that being said, let's go ahead and zoom in on some of the market action I was looking at today. Really was a snooze fest. You could see just that triple bottom. It's still holding that wick down here, the low part, about 15,548. But again, it looks like triple bottom. So far, we did slice the 100-day moving average. But again, it is holding up. So the problem is now, what do you do? So in a sense, you're almost waiting. If you're a QQQ trader, you're waiting for right here, right at 377.40. So let me get 377.40 on the alert side. And you can see right there, that would be your range for the bottom support. And then once you break that, 370 calls, 375 calls, something like that would be great for next week if we can get some continuation. What would be the catalyst for next week would be CPI, which is Consumer Price Index. That's an inflation data reading. That'll be on Tuesday morning. And then we have Producer Price Index Wednesday, same time. So again, big inflationary data. It's going to give us a lot of answers in terms of what the Fed is thinking. If we have a really high number, the Fed is really going to for sure go ahead and raise rates in March. Does that make a huge difference in the long-term scheme if you're a tech investor? No. But short-term volatility, it will give you some opportunities to pick up some stocks that you've been wanting to get for a while, like a Tesla, an Amazon, a Facebook, or Meta, Google, which I'm looking to buy Google. It's one of my top 10 of 2022. So again, I welcome this kind of moves. That's fine. I'm okay with that. Again, as a long-term investor, as a trader, again, you're paying attention to your moving averages. You're looking at everything as a whole. So just keep that in mind. We had a question here. Hi, Carlos. What's going on with Google? Do you see any potential upside? Yes, I'm going to have a top 10 of 2022 YouTube. So again, Google's part of that. So don't worry, Jorge, I'm going to get that video out tomorrow. That's going to be out tomorrow. So again, I'm going to go over each of the charts. I'm going to go over each of the stocks and what I like about them. And hopefully that will answer your question with Google, because Google is on the list. Hey, Carlos, this is Steven. Just spoke on IG about gold. Yep, there you go. No cap trading. Steve is on. That's the question I'm about to answer. Let's answer the rest of them here. Levels to buy Citi. Let's take a look at Citibank. Right here, there is an upside gap to fill right at 61.10. Obviously, we're looking at it. It was up 1.34% today. So again, here is a pretty good level if you want to buy some Citi. I got Apple 138, which looks like a strong support on the weekly. Should I hold or rotate into something else? If you're a long-term investor, definitely hold Apple. If you're a trader, then again, it just really depends what you're looking at. So again, we can get a retest of that 50-day 164.81. Apple's one of those companies. Again, that's my only stock in my IRA. It's an Apple portfolio, literally. It's nearly, God, I don't even know how much I have in there. I have to see. Give me a second. I can tell you exactly how many shares I have of Apple in that IRA. About 486, and I still have to add for this year. So I haven't bought that yet. So I think Apple's incredible. I think that's the company you want to hold on for years and years to come. I wouldn't worry about your entry level being 138. You're actually green, so that's a good sign. Why is big tech being sold with high beta names, speculating names? So the high beta names were actually up today. Look at today. GME was up 7.7%. Space up 5.69%. DraftKings up 5.58%. Granted, New York is now going to have legalized sports gambling. Peloton was up today 5%. CGC was up 3.78%. Airbnb up about 4%. AMC 2.36%. Alibaba up 2.5%. Again, all those guys caught bid. So again, it could be one of those things, or just some dip buying at the end of the day. But the large cap, mega cap names that we know and love, obviously you're starting to get a little bit of a take profits, kind of seeing a rotation into financials. Basically, what fund managers are probably looking at is, can these companies keep these multiples even with a rising rate environment? That's really the key, what they're looking at. So we have earnings coming in February. We're definitely going to see how these companies did, and then we can make assessments moving forward for at least the first half of 2022. Hey, Carlos, why Chase Bank is not moving up like Wells Fargo and Bank of America? Driving me crazy. Yeah, again, each bank is obviously their own thing, so it's kind of difficult to kind of go with just that and kind of see the deal with it. JPM is just stuck in a range right now. Again, it's actually outperforming names like Citi. Wells Fargo, absolutely the best of the breed in terms of the stock performance. Remember, they got beaten down a couple of years ago with all that fraud stuff. Bank of America is pretty much as steady as it gets, all the way up, nearly $50 a share. I saw a lot of volume on those 50 calls. Bank of America is one of the ones that always has volume for years and years now. So again, is it frustrating? Sure, but I think one of those deals is that if you're looking for options in regards to financials, always look at your volume, always look at what's the best chart amongst the bunch. What has price action tells you everything. So JPM wouldn't have been my first choice, that's for sure. I would have probably looked at Bank of America first. How's BABA looking, if you don't mind? Let's see. No, I don't mind at all. BABA is up, was up today 2.5%, but you could see it did fall a little bit on the daily as a top of 133. 136.58 is your 50-day moving average. That's the level I'm looking to break. Once that does on the daily, I'm definitely looking for some upside calls here, or maybe ride the wave and buy some more, because we'll have a gap to fill right at 161. And that's exactly the target I'm looking for Alibaba. If that can hold and break 170 and just kind of stay within 170, 182, I consider that a big win for all the dip buyers this year or last. Time to get in Shop. I think Shop is an excellent company. If you want to own it, go for it. I prefer Amazon. Palantir is actually my preference in terms of the growth names. I love Palantir. I had that conversation with our investment club. I think Palantir now is what Google was in 2003. Artificial intelligence contracts with the Defense Department and the U.S. Army, data analytics. This is the stuff I'm really into. I guess in a way, it's like looking at Terminator 2 and Skynet. Hopefully that doesn't happen, but if there's a company that may do it in the end with that mixture of artificial intelligence and the U.S. military, maybe it's Palantir that's going to be the one taking the forefront. Scary thought, I know. Let's see. Time to look at JD or SC. I don't know much about SC. I haven't really researched them, but let's take a look at JD together, and then I'm going to answer. This question here from Steven. JD.com. I prefer Alibaba in terms of the Chinese companies and NEO. JD.com, again, you can see a nice little balance kind of moving, coupling with an Alibaba name. So is it a buy here? I'd have to do a little more research in terms of their fundamentals. It wouldn't be just pure charts. If you look at SE again broke support. So I think JD would be a better trade in terms of just the stock action itself. So there you go. Thoughts on the bottom for SPY? Looks like it potentially fall to 460. So let's take a look at that. SPY's bottom, if I had to call a bottom, would be right around 450. 450 would revisit the November lows. So again, right here, we're just hugging that 50-day, but then we have the 455 coming. So if we could kind of break below right here, 463.90, I think that's a fair number there. Kind of gives us some room from any kind of volatility from CPI. This is a daily chart. So again, like if we get some crazy wicks with a CPI number, it's not going to break our alert and fake us out. What we want to do is make sure that we get a clean break under that closing wick, the bottom end of this wick, excuse me. And then after here, what I want to do is go ahead and see if we can revisit the 100-day moving average on SPY. That could be another inflection point since the 50 so far is holding, but your 100-day could be an inflection point, so you don't want to hold shorts here too long unless we start getting another continuation down to like 452, 453. Then the 450 would be the level that you're looking for in terms of playing a buy the dip. Again, this is a stretched out period. CPI could change that a lot for sure. So again, a high reading would really be bad. A low reading would be very, very good. So let's see what SPY does. I know it's kind of a broken down thing, but again, I'm stretching it as far as I can because there's multiple scenarios there. Let's see, what price do you think to add on Amazon? Amazon has just been ranging now for the last 52 weeks. 31, 36 is my level to buy on Amazon. And Bible was awesome scout today on your level. Thanks, Carlos. You're welcome, Carmen. All right, let's answer some questions here. All right, Steven, the question here, I'm going to go ahead and read it to everybody so we can get on with it. Hey, Carlos, was wondering if you could I could chew your ear a little bit on gold. I've been a full-time trader for 4 years, wanted to start some gold more often and wanted to see your insight on it. Pretty much like the correlation between gold, what affects the price of it, the aspect, let's say, the cost of the dollar, VIX, inflation, crypto. Any insight is greatly appreciated. Thank you very much for the question. Let's go ahead and start with gold futures. That'd be like the best level to do it, best way to do it because this trade's 24.5. So let's take a look at gold. Again, looks pretty wild. Don't let the lines fool you. Don't let the lines scare you. I can just go ahead and remove this open interest. Don't worry about that. So again, what am I looking at here? We're looking at here at this Fibonacci retracement level that I had here at the bottom. So what I could do is actually stretch it. So let's go ahead and remove this drawing. So we're just going to do Fibonacci levels top to bottom, or we could do it from midpoint from the support level here, which could be fair on the bottom end of this range. So we can redo that. Let's not keep it too stretched out, 3 years. Again, we're going to stick with technicals first, and then we're going to go into the fundamental analysis of it. So we're going to get to right there, pretty much fair levels, and you can see right there. So we see the bottom end of the Fibonacci retracement is right around 1673, or right between 38.2 and the 23.6. So 23.6 could be your next support around 1712. I've been saying it for a while on every morning note. 1800 is a key level, that kind of level that we need to clear that. So 1834 would be the best level to show that gold actually has some room to run, but it's really just been ranging now since April. So it's very hard to trade here. Again, unless you had this kind of channel coming down, that's something that you can work with if you're a trader, but range bound is not going to work unless you're scalping. And the only levels I would say is worth scalping, 1771 for a bounce and 1832 for a short. That's probably your best bets in regards to gold. And you could see the volume, it isn't that crazy as it was in 2020. What does that tell you? This was during the throes of COVID, lockdowns, a lot of fear. We had that jump from 1250 all the way back up to 1650. And then as we went through 2020, we peaked at 2,000 an ounce. We fell back down and now we're at 1796. But relatively speaking, in a 3-year period, gold has been okay. And can it compare with cryptocurrency like, let's say, Bitcoin? No. So that's really the difference now with gold and the crypto market and how it trades. You gotta understand that a lot of crypto traders and investors, let's just say investors, are looking at Bitcoin as digital gold. Obviously, it's not as heavy. Obviously, you can't touch it. There's no sensory input in terms of holding on crypto. But with a gold coin, you can see it, you can touch it. It's very old school. You know, remember we used to be on the gold standard in the United States. That's been abolished in the 70s. But gold, it has still a place in our culture. You know, gold jewelry, gold watches, gold coins. We've always had that. So again, gold will never go away. Again, it's still, in a sense, for everyone to think about as a storage of value. Again, you're not expecting tons of growth. It's really one of those things like apocalyptic, the world's ending, massive inflation, gold will be great. But ever since we've had these inflation readings recently, remember last year, gold hasn't done much. So we can't use that argument that, oh, it's a hedge against inflation. That's not true. So what is really the problem here with gold? Well, really the gold issue is that there is competition with Bitcoin. A lot of people still see Bitcoin as digital gold and gold as old school gold. So kind of see it as the telephone company versus a cell phone company. Which one would grow faster in the 90s? You know, obviously we still had landlines in our home. It was very different. But as the 2000s, new millennium came, 2010s, cell phones became more prevalent. My cell phone is basically my house phone. I don't have a house phone. That's, again, but you still have pay phones laying around. You still have office telephones. So I kind of equate it that way. That's kind of the best analogy of how people see it now. Again, gold is kind of like landlines and Bitcoin is cell phones. That's really the best example I can give in terms of a fundamental aspect. And crypto is sucking, honestly, all the volume and all the interest away from gold. But again, you still have the old school mentality that gold is still that preservation of wealth. It never has been worth zero, and there you go. But as you know, the new generation comes in, the new generation of investors, we see crypto as the new frontier, the new trend, the transfer of wealth. It's not corrupt, you know, it's not fiat. We know all the talking points with crypto, but again, I think that's what pulls away from these precious metals is really crypto. So how do you trade gold in a sense? So we know that rising interest rates don't help gold. What helps gold is pretty much a national emergency. That's what I'm seeing here. That's all I see. So again, if we're expecting lockdowns again, another variant, like a flesh-eating variant or something really, really crazy, then yeah, gold can start hitting 2,000, 3,000 an ounce, sure. But is that realistic? Probably not. I'm not saying you shouldn't own gold. I own some gold coins. I have a video on it on YouTube. I have gold coins, gold bars, and all that good stuff. Again, cool little hobby. You know, I gained some money, nothing crazy, but I mean, I have way more assets in crypto than I do with precious metals personally. So I think that's what you're starting to get the progress from. So what are some of the indicators where gold will do well? Again, fear. That's really all I could say is fear, and if the dollar falls. If the dollar, which again, you can look at DXY as your ticker for the dollar index. The dollar index is a comparison of the dollar versus a basket of currencies all around the world. Yen, ruble, euro, you name it, shekels, pounds, all that stuff. So again, when you see the Dixie down, the dollar index, it's because the other currencies are higher or doing better than that one at that particular moment. So with that being said, if we have the dollar down and gold is priced in dollars, obviously gold should be boosting up today. So again, you see that today, DXY down 0.60%, gold is up 0.41%. So it's not exactly a one for one, but again, usually when you see the dollar sink, this is when gold tends to rise. So let's go ahead and compare that between that and the US dollar. And you can see almost an inverse effect. Now we're seeing a breakout in the dollar after sinking in 2018. So again, what has changed here? Look at 2020. We printed more dollars. So again, the more supply of something with the same demand, this is what happens. Again, you can kind of look at this comparison of the dollar versus yields at the end of the day. So again, as yields fell, you see the dollar going down as well. And the dollar kind of bottomed out right around, what was this date here? About 2021 January. And again, you can see we're almost breaking out. Again, you can see almost that kind of cup there, in a sense, cup and handle, if you will. And you can see that 98 could be tested, 100 could be tested. So I'd rather be long the dollar than I would be in gold personally. And again, it is still cash, but again, as rates go higher, maybe the inflation is transitory. Maybe when we start seeing these inflation numbers improve, then the dollar can start firming up a little bit more. But again, when interest rates rise, understand that the dollar does gain in value because there's less of them out there. That's how the Fed lowers the money supply by raising rates, the cost of doing money. But if that's the case, then we know that if the dollar goes up, then gold's going to go down. So gold has a little bit of a rocky road ahead of it, unless we're expecting the worst case scenario in terms of a national emergency or something like that. So it's good to have, kind of like, I guess, like a bomb shelter. You can have one in your backyard, but I don't think you'd live in it, in my opinion. So there you go. I hope that really made a difference in terms of kind of putting it in perspective. Yes, I watch gold futures. Follow-up question. When I'm monitoring gold, should I be using future TNS level 2 level? I would say for intraday trading, and it comes for gold, your best bet really is the technical analysis, kind of putting your levels on, moving averages and such. Volume is key, and you can see ever since April of 2020, the volume has completely fallen off in the difference, right? But what has gained in that time? Bitcoin, of course. So if I was trading today, like I said, I'll go ahead and bring up the levels one more time. Again, unless you're planning to scalp, I'll give you the swing levels I would be looking for. 1834 is what it would be, resistance, and your support would be right around 1771. Again, that's not really saying much. It's about a $25 move. So again, you'd have to go through the hourly candles and 30-minute candles. So 771 right there, and you could see right on point in between two Fibonacci levels. So the only issue with gold is that their margin requirements are a little higher, so it's not as easily accessible like an S&P futures or Nasdaq futures. So I don't know many gold traders as much. I've seen a lot more success with Nasdaq futures, crude oil futures, and S&P futures, to be completely honest with you. So I think gold is a really good indicator for kind of fear in the market or a dollar index proxy. But in terms of the grand scheme of things in the market, no, I don't think gold is really worth trading at this particular moment. And I hope that really bottles it up and makes a lot of sense, my man. Thank you again, Stephen, for the question. I hope everyone enjoyed the conversation in terms of what we talked about in gold, fundamental analysis, technical analysis, and where I think it's going. So have a great rest of your weekend. Happy Friday. My Cowboys play tomorrow. They play the Eagles. I would take the W, obviously. So, hey, I know I said that if the Cowboys win the Super Bowl, I will teach someone for free. I'm sticking with it. But my fingers are crossed. God, they didn't look good against the Cardinals. So you never know. Crazy things have happened in the NFL. So let's see what's up. Have a great rest of your day, guys. Enjoy your weekend. And I'll see you guys on Monday. Cheers.